Welcome back to TradeSmart, where we are researching and backtesting trading strategies to find the best ones and code them into fully customizable TradingView trading scripts. These scripts can be connected to most of the popular exchanges and brokers and are able to be used as an automated trading bot. So far, our team has already coded 11 different premium scripts and released 28 different optimizations, ensuring that our strategies can adapt to any market conditions, timeframes, markets, be it stocks, forex, or crypto. By becoming one of our Patreon supporters, you will gain access to all of these powerful scripts and optimizations, giving you the edge you need to succeed as a systematic trader. But are these optimizations profitable since they got released? And how many assets are they profitable on? In this video, I will answer these questions and dive deep into backtesting, showing you real results. You will see examples of both robust, profitable, and over-optimized strategies too. By the end of this video, you will also have a clear understanding of the potential profits that these optimizations can make and what to look for when evaluating a trading strategy backtesting results. So, if you are serious about becoming a systematic or algorithmic trader, make sure to watch this video in its entirety, as I am about to share a lot of valuable information here. Let's get started. Creating a profitable trading strategy is not easy. Usually I spend days perfecting an optimization. Here at TradeSmart, we take a methodical approach to strategy optimization, carefully considering every detail to ensure that our strategies perform at their best. When I set out to create an optimization, the first thing I do is select an ideal timeframe and asset combination and a strategy script. From there, I start experimenting with different filters, entry and exit options, and other variables to fine-tune the strategy for optimal performance. So keep in mind that each optimization is specifically made for a particular asset and timeframe combination. But that doesn't mean that the strategy is limited to only that specific combination. For example, I recently created a strategy for GBP/JPY using ChatGPT and found that it was profitable on 21 other forex and 45 other crypto pairs. Even more surprising, this optimization that was specifically designed for GBP/JPY performed even better on another crypto pair. This discovery sparked the question in my mind: what if our other optimizations have this same potential? And is it possible that they could work even better on other assets? I had to find out. So I spent the last week backtesting our optimizations on different assets and on pre- and post-optimization price data. I tested all of our optimizations created at least 2 months ago, because I wanted to have at least 2 months of out-of-sample price data. I tested the optimizations on 42 crypto and 28 forex pairs, 24 stocks, and 11 indexes. In this video, I will be sharing with you the results of this research. You will see which assets or optimizations were profitable on, after their optimization date, and also on 1 year of price data before their optimization date. This will give you a clear understanding of how diverse our strategies and optimizations are. So let's dive in and see how our optimizations perform. Here you can see the results of each optimization on price data after the optimization release dates. For example, here are the results for the optimization with the ID of 0004. This is the 5-minute ETH/USD strategy that has been profitable since 2017 and was presented in this video. Or check out this other optimization with the ID of 0001. On the left, you will see how many pairs it was profitable on and had a profit factor of more than 1.2. On the right, you can see these pairs listed. In general, the most pairs an optimization works well on, the more robust and sustainable it should be. This particular optimization was originally made for the GBP/JPY 30-minute chart on the 9th of May. However, as you can see, it didn't perform well on that pair after its optimization date, but it did perform well on a few other forex pairs, as well as crypto, stocks, and a few indexes. This is exactly what I was curious about: whether our optimizations could perform better on other assets or even in other markets. And as it turns out, in some cases it can. And here comes another interesting topic: why I valued the results based on profit factor. And what is profit factor first of all? To make sure we are clear on this, first let's go over an example. Imagine there are 2 different script optimizations for the same timeframe and asset combination. We will call them optimization 1 and optimization 2. Here you can see the backtest results and the equity curves. Which optimization is better and which one should I use? So, how would you decide which one is better? Many beginner traders might look at the net profit thinking that if optimization number 1 made more profit than optimization 2, it must be a better choice, right? While net profit is an important indicator, it is not the only aspect you need to consider. To further complicate the matter, let's say that the backtest of optimization 1 shows the results for the last 4 months of price data, while optimization 2 shows the results for only the last 2 months. Now it's hard to tell which optimization is better. And that's why, because optimization number 1 had twice the time to generate at least the same profits as optimization number 2. And this is where profit factor comes in. Profit factor is basically the gross profit divided by the gross loss, and it is a commonly used metric to evaluate a strategy's performance. The higher the number, the better, because it tells you that the strategy generated more profit than losses. If the profit factor of the backtest is less than 1, it means it lost money. If it's above 1, it means it was profitable. As I am about to compare backtesting results generated on different backtesting time intervals, I have to use profit factor for comparison. I choose a minimum of 1.2 profit factor as a low limit. Why 1.2? Well, anything about 1 is profitable, but I wanted to exclude the barely profitable pairs. In general, I prefer profit factors of at least 1.4 to 1.5 for an optimization. But in this case, we will go with 1.2. Now let's move on and see the results. In this spreadsheet, I listed all the pairs that had a higher than a 1.2 profit factor based on backtesting results generated on the after optimization release date price data. For example, here you can see the results for the 0001 optimization. Altogether, I checked 105 assets, and 23 out of those assets produced backtesting results above a 1.2 profit factor. You can see all the assets that passed the test listed on the right side. You can download this spreadsheet and the other one I will be showing you by clicking on the Google Drive link linked down in the description. Before moving to the second backtest, we can draw numerous conclusions. For instance, we can check which optimization is best for a specific market, or even identify which optimization is the overall best. To do that, I went over all the data and highlighted the optimizations that had the highest number of passed assets in a specific market. For Forex, the optimizations that had the highest number of pairs with results above 1.2 profit factor is the 0011 with 10 passed assets. Following that, we have 0016 with 9 and 0009 with 7 passed assets. For crypto, the best optimizations based on results after optimization date are the 0017, 0021 and 007. For stocks, the best optimizations are 0020, 0015, 002, 0011 and 0017. And for indexes, the best optimizations are 0018 and 0011. To identify the overall best optimizations, I analyzed the ones that were profitable on the most assets, and these are the 0017 with 33 assets out of 105 with an above 1.2 profit factor. Then we have 0011 with 29 assets and 007 with 28 assets. However, these results alone don't necessarily indicate that these optimizations are the best for specific assets and pairs. So I looked at the best optimizations equity curves one by one and found that there were a high number of results that only had a few trades. If you've been a follower of TradeSmart for a while, I've always emphasized that other factors like trade count is an important factor in deciding if a strategy or an optimization is good. We can't base any conclusions on backtests that have a very low number of trades. So I decided to test these optimizations on larger price data. I backtested all of these optimizations again on 1 year of price data before each optimization's date. But now I will test them on only those assets that were already proven to be profitable after the optimization date. Once the results are in, we will know which assets are the best to use with which optimization. I will also list the exact profit factor for each asset so you will have a clear understanding of the performance of each optimization. At the end of the video, I will also show you a few equity curves and detailed backtesting results of the best optimization and asset combinations. Here you can see the results on 1 year of price data before the optimization release date, tested on all the assets that had an above 1.2 profit factor after the optimization release date. On the left side of the spreadsheet, you will find the most important statistics. Here you can see the number of assets that were profitable after the strategy optimization date using the specific optimization, as well as the number of Forex pairs, crypto pairs, stocks, and indexes that were profitable before the optimization release date. Moving on, you can see how many assets that were profitable after the optimization release were still profitable before the optimization date. So basically, in the case of the 001 optimization, there were 23 assets that were profitable after the optimization date, but out of those 23 assets, only 5 assets were profitable even before the optimization release date. The last but one of the most important factor is the survival ratio. The survival ratio is the ratio between the profitable assets before and after the optimization date. Generally, the higher this value is, the better the optimization is. On the right side, you can see the statistics broken down to each asset I tested. In the brackets, I put the profit factors for each asset before the optimization date. For example, the best results were achieved on the XOM stock with 2.5 profit factor on price data 1 year before the optimization release date. I also have color-coded this spreadsheet so it can be easily understood. Assets with profit factor of 1.2 or higher are colored green. Assets with a profit factor between 1 and 1.2 are colored yellow, and assets with a profit factor less than 1 are colored orange. If we quickly scroll through the results, we can easily decide which optimization is worth a deeper look. For example, 005 looks great in my opinion, and 0015 looks even better. If you got interested in using these optimizations and strategies, you can get access to all of them by becoming one of our supporters on Patreon. Link to our Patreon is down in the description. Once you are one of the 70 Smart Trader tier members, you will get access to all of our optimizations, currently 28, and 11 different highly customizable premium TradingView strategy scripts. With these scripts, you can fully automate your trading and trade these optimizations. You will also get access to our Discord server where you can exchange trading ideas with other like-minded Smart Trader tier members or with us, the TradeSmart team members. To check out our Patreon page, click on the pop-up in the top right corner or find the link down in the description. I also color-coded the survival ratios. Survival ratios that are 50% or above is colored green, to be marked as the best optimizations. In yellow, I colored the decent but not great results. These are survival ratios between 40 and 50%. And in orange you can see the ones with under 40% survival ratios. Of course, it does not necessarily mean that optimizations with less than 40% survival rate are worthless, but as we are serious about proper risk management and sustainability, we only want to use the best optimizations. In case of optimizations that were extremely good in a specific market, like crypto or stocks, I added a comment like this one. Okay, but the final question. Which ones are the best optimizations and how many are there? After analyzing 20 different optimizations, I considered 005, 007 and 0015 to be the best optimizations. I would like to highlight 0015. That optimization had 0 losing assets in the second backtesting phase, which is amazing. It was able to profit on 8 crypto pairs and on 11 stocks. And finally, let's see a few of the equity curves and results that were achieved with the best optimizations. Here you can see the result of the 005 optimization on the Phil USDT crypto pair 10-minute chart. The results are generated on price data between May of 2021 and December of 2022. This is a time interval of 1 year before optimization release and the after optimization release price data until the 31st of December 2022. As you can see, the strategy optimization in that time interval took 645 trades and generated 144% net profit. The profit factor is above 1.5, which is great, and the max drawdown is just under 20%. This strategy optimization takes short positions only, as it was created specifically for bear markets like the one we are currently in. Let's check out another backtest, but now on the 007 optimization. Here are the results of the 007 optimization on BTC USDT 1-hour chart. The results are generated on data just like the previous one, so before optimization release and after release price data. The backtest shows a profit factor of above 1.6, a net profit of 78%, and a max drawdown of 13.23%. And finally, let's take a look on a result generated with the 0015 optimization. These results are generated on the Costco stock. The strategy only took 62 trades, which is below my preferred trade count, but after 62 trades, this optimization generated 31% net profit, had a 2.167 profit factor, and only 4% max drawdown. Which means we can safely increase the position sizing from the current 1% risk per trade to, for example, 3% risk per trade. That way, the net profit would have been closer to 90%. And last but not least, let's check out one of the failed strategy optimization, and let me share with you how you can spot if you have over-optimized or overfitted your strategy optimization. Here you can see the 009 optimization. This was made for BTC versus US dollar 1 hour chart. This optimization was made and released on the 16th of August 2022. This strategy optimization performs great, but let's see how the strategy performed after the optimization release date. To do that, I limited the strategy backtest to only show the results after the optimization release date. And as you can see, these results are nowhere near to the before optimization results. Now it only has a 0.4 profit factor and lost 4%. Based on more than 4 months of after optimization release price data, we can say that this strategy is overfitted/over-optimized and has no predicting power. Why? The strategy after 4 months of out-of-sample price data was steadily losing money, and the profit factor is nowhere near to what we would expect based on the previous backtesting results. To close out the video, I want to mention that in this video I reviewed just 22 optimizations out of the 28 that have already been released and are accessible for our Patreon supporters. Our latest strategy, which was created with the help of ChatGPT, looks amazing and probably will become one of the best strategy optimizations so far. It works on 45 different crypto pairs and on 21 forex pairs. If you are interested in that strategy, check out this video. And with that said, as always, thank you all for watching, like and subscribe for more content like this. Have an amazing day and see you in the next video.